Welcome to the deep dive. Today, we're really zeroing in on the Mammoth Lakes real estate scene. We've got a market update from May 2025.
Yeah, it's pretty detailed.
Absolutely. Full of crucial info if you're, trying to get a handle on what's happening in that specific market. It's dynamic, that's for sure.
For sure. And we're getting into the real details here. Inventory levels,
Mhm.
pricing trends across different property types,
Mhm.
even looking at mortgage rates and how they fit in. It's a solid snapshot.
And some things really pop out right away, like these contrasting trends between condos and single-family homes,
Yeah,
inventory-wise anyway.
definitely.
Plus this surprisingly strong demand for the really high-end luxury condos, kind of unexpected.
Mm.
So the plan today is basically to unpack all this, pull out the key insights, give you a clear picture of Mammoth Lakes real estate right now.
Let's do it. Where should we start? Maybe the overall market picture.
Yeah, good idea. The big overview first. So the report says Mammoth Lakes started 2025 pretty balanced, housing-wise.
That's right. For the first few months, things were stable. We saw about a 4-month supply of inventory, give or take.
And 4 months is generally considered balanced, right? Neither buyers nor sellers have a huge advantage.
Exactly, kind of that middle ground. But then April 2025 rolls around and things started to shift a little.
Okay, how so?
Well, the number of condos listed for sale went up. Pretty noticeably, actually, around 20%.
20%? Wow. Did that tip condos into a buyer's market then?
You'd think maybe, but no. It's interesting, even with that increase, the report still classifies the condo market as balanced overall.
Okay, that's important. So more choice for condo buyers, but not a glut. What about single-family houses? Did their inventory jump too?
Nope, that's the contrast. Single-family home inventory stayed pretty much flat during that same time.
Huh. So fewer houses available relative to demand?
Precisely. And because that supply is still tight, the single-family market continues to lean more towards a seller's market.
Got it. So two different stories playing out there. And what about prices amidst all this? Any major swings?
Overall, pricing seems to have been quite stable, according to this update.
Stable, okay.
And it also sounds like negotiations are, pretty reasonable.
Yeah.
Buyers and sellers aren't miles apart on expectations. Suggests a grounded market, really.
Okay, good context. So balanced overall, but definitely different dynamics underneath. Let's dig into the condo market specifics first. How did condo sales look back in 2024?
So for 2024, condo sales actually edged up slightly compared to 2023. 243 units sold versus 231 the year before.
A small increase then.
Yeah, but here's the interesting part. The median price.
Ah, always the key metric. What happened there?
It actually softened a bit. The median price for condos sold in 2024 was $725,000,
Okay.
which is down about 4.5% from the $759,000 median in 2023.
Interesting. So slightly more sales, but the typical price point came down a little. And how long were condos sitting on the market in 2024?
They took longer to sell. The median days on market was 72 days.
Compared to?
Compared to 56 days in 2023. So yeah, definitely an indicator that the pace for condos slowed down last year.
Right, a slower tempo in 24. How about the start of 2025? First 4 months, has that trend continued?
Well, activity seems to have picked up. Through April 2025, we're seeing an average of about 19 condo sales per month.
Okay, a bit more volume.
And here's the kicker. The median sales price for those first 4 months jumped up significantly to $864,500.
Whoa, $864,500. That's
Yeah.
a huge leap from the 2024 median of $725,000. What's driving that?
Yeah, it looks dramatic, but you have to break it down. For resale condos sold in early 2025, the median was $755,000. Still up, but closer to 2024 levels.
Okay, so where's the big number coming from?
New construction. The median price for new construction condos sold in that period was $2,195,000.
Ah, okay, so those high-priced new units are really pulling that overall average up.
Exactly. The mix of sales is key.
Makes sense. And what about the time it's taking to sell condos now in early 2025? Is it still slow?
It's actually crept up slightly more. The average days on market so far in 2025 is about 76 days. But again, there's a split. Resales are averaging around 61 days.
Yeah.
Those new construction units, though, they're averaging 364 days. A full year, basically.
Wow, a massive difference for new builds. Definitely something buyers and sellers need to be aware of. So fast forward to right now, May 1st. What's the condo inventory situation?
As of May 1st, 2025, there were 88 active condo listings. That's up from 74 the month before.
Okay, inventory climbing a bit.
And pending sales are up too. 29 condos under contract compared to 23 previously. And interestingly, 8 of those pending sales are new construction.
Got it. So more condos available, more deals happening. Now let's pivot to single-family homes. What did 2024 look like for house sales?
It was the opposite trend to condos, sales-wise. Single-family home sales actually decreased in 2024. Only 58 properties sold,
Down from what?
down 12% from the 66 homes sold in 2023.
Fewer sales. Did prices follow suit and drop?
Surprisingly, no. Even with fewer sales, the median price for single-family homes nudged up slightly in 2024. It hit $1,300,000.
Up from $1,270,000 in 2023.
That's right. So fewer transactions, but the typical price held firm, even increased a bit.
And did houses also take longer to sell in 2024, like the condos did?
Yes, they did.
Yeah.
Same trend there. The median days on market for houses was 73 days in 2024.
Up from 57 days in 2023.
Exactly. So that slowdown in pace was across the board last year.
Okay, now let's look at houses in the first 4 months of 2025. What's the sales activity been like?
Pretty modest volume, averaging about 5.3 sales per month.
Only about 5 a month.
Yeah, but the median price for those sales is strong, $4,400,000.
So, continuing that high price point trend despite low volume.
Mm.
What about the time on market for houses in 2025? You said it was already up in 2024.
It stretched out even more, significantly more,
let's
actually.
keep more.
The median days on market for single-family homes sold through April 2025 is averaging 159 days.
159 days. Wow. That really speaks to buyer caution at these higher price points, doesn't it?
It really does.
Yeah.
Buyers are taking their time, being selective.
Understandable. So, what's the current single-family inventory count as of May 1st?
It's incredibly tight. Only 14 active single-family listings. That's actually down slightly from 60 in the month before.
Just 14 homes for sale.
Yep. And there are 6 pending sales, 5 resales, and 1 new construction. That extremely limited supply is why it's still very much a seller's market for houses.
No kidding. Super tight. Okay, let's talk about a major driver, interest rates. What's the latest there as of early May 2025?
All right, so the report gives us rates as of May 2nd. For a standard 30-year fixed conforming loan, that's the one that fits within Fannie Mae and Freddie Mac limits, the average rate is around 6.9%.
6.9%. And for bigger loans, the jumbo ones?
Just a tick higher. Average jumbo rate is sitting around 7.0%.
Okay. And these are just benchmark rates, right? Individual rates will vary.
Absolutely. These are averages, don't include points or specific adjustments for credit score, down payment, stuff like that.
Got it. What's the forecast look like for the rest of 2025? Are rates expected to move much?
Well, they've been pretty stable so far this year, bouncing around mostly between, say, 6.7% and 7%.
Pretty steady then.
Yeah. The outlook suggests maybe, just maybe, some modest declines later in the year. The report mentions a possibility of rates getting down towards maybe 6.3% by year-end.
Okay, so no dramatic drops expected, but potentially a little relief later on.
That seems to be the consensus, yeah.
The update also mentions some financing strategies people are using. What are those about?
Right. With rates where they are, people are getting creative. Things like temporary rate buydowns are an option.
Like a 3-2-1 buy down? How does that work?
Basically, the seller or builder pays upfront to lower the buyer's interest rate for the first few years. So a 3-2-1 means the rate is 3% lower the first year, 2% lower the second, 1% lower the third, and then it settles at the original note rate. There are also 2-1 buydowns.
Ah, helps ease buyers into the payments. Makes sense. What else?
Seller concessions are still happening, sellers contributing towards the buyer's closing costs, for example. And some lenders are offering programs where they'll cover the closing costs on a future refinance if rates do drop significantly. Kind of takes away some of that what if rates fall anxiety for buyers.
Those all sound like potentially useful tools in this environment. Good to know. Okay, let's circle back to pricing and inventory, but slice it by price range this time. The report calls the Mammoth market kind of unique here.
It does. It points out that turnover is generally low in Mammoth Lakes.
Why is that?
A lot of owners either don't have mortgages or they have very little debt, or maybe they locked in those super low rates from a couple of years back.
Right, the golden handcuffs effect. Less incentive to sell if your rate is 3%?
Exactly.
Yeah.
And that definitely impacts the supply, especially in certain price brackets.
Okay, so bearing that low turnover in mind, how does the months of inventory, that supply measure, look across different segments right now?
All right, let's break it down as of May 1st. Single-family homes overall. Just 3 months of inventory. Firmly a seller's market.
3 months, okay.
Condos overall. About 5 months of inventory. That's considered balanced, as we discussed.
Right.
Now, within condos, if you look at units under $1 million, the supply ranges from 3 to 6 months. So relatively balanced in that more affordable, relatively speaking segment.
Okay, under a million is balanced. What about pricier condos?
This is interesting. Luxury condos, priced between $1 million and $2 million. They're moving slower. Supply there is anywhere from 5 months up to 14 months.
14 months. Wow, quite a range and potentially slow going there.
Yeah, definitely softer in that bracket. But then you get to the ultra-luxury condos, the ones over $2 million.
Yeah.
Only about 1 month of inventory there.
Just 1 month. So despite the high price tag, demand is really strong for those top-tier condos.
Apparently so. Very strong demand, very limited supply, right at the top end of the condo market. It's quite striking.
It really is. Okay, now let's do the same for single-family homes, breaking them down by price.
Okay, for houses, the report suggests most buyer activity is really happening above that $1 million mark.
Makes sense given the median prices we talked about.
Right. The hottest segment seems to be homes between $1 million and $1.5 million. Only about 2 months of supply there. Very competitive.
2 months, yeah, that's moving fast.
Then, the next step up, $1.5 million to $2 million. That's moving a bit slower. Around 4 months of inventory. Still leaning toward sellers, but not as frantic.
4 months, okay. And houses over $2 million, similar to the ultra-luxury condos.
It's healthy, but maybe not quite as extreme. About 5 months of supply for single-family homes, over $2 million. So, good interest, decent demand, but maybe a little more breathing room than the absolute peak condo market.
Fascinating breakdown. Really shows where the pressure points are. Okay, one last crucial factor mentioned in the update. Insurance. Homeowners insurance in California. What's the situation?
Yeah, this is a big one. The report flags the ongoing challenges with homeowners insurance in California, and it's especially relevant for areas like Mammoth, which are seen as having higher wildfire risk.
What kind of challenges?
Well, you're seeing insurance companies significantly increasing premiums. They're also tightening up coverage, maybe higher deductibles or excluding certain things. And in some cases, carriers have just paused writing new policies altogether in high-risk zones.
That sounds difficult for both buyers trying to get coverage and existing homeowners facing renewals.
It absolutely is. It can add significant cost and complexity to owning property there.
So what's the main advice regarding insurance then?
The key takeaway is, don't wait. If you're thinking of buying, start researching insurance options very early in the process, like as soon as you're seriously considering a property.
Don't leave it until you're already in escrow.
Definitely not. And even if you already own property there, stay proactive. Understand your current policy, talk to your agent about potential changes, and explore alternatives if needed. It's become a critical piece of the puzzle.
Crucial, and requires early attention.
Got it. Okay, that was a lot of ground covered. Let's try to distill it down. What are the main headlines from this May 2025 Mammoth Lakes update? Okay, let's recap. Condo inventory is up, but that market is still considered balanced overall.
Right.
Single-family home inventory is very tight, keeping it a seller's market.
Definitely.
We saw that surprising strength in ultra-luxury condos, those over $2 million, a very high demand.
Yeah, that stood out.
For single-family homes, the $1 million to $1.5 million range is the most active, the most competitive spot.
Hottest segment?
Overall pricing seems stable. Condo median price is up significantly year over year, largely due to new construction, while the single-family median price is also strong.
Wow.
But properties are taking longer to sell across the board. Those days on market figures have stretched, especially for single-family homes, signaling some buyer hesitation.
Yeah, caution is there.
Mortgage rates are relatively stable, hovering near 7%, with maybe a slight potential decline later this year, and creative financing options are being used.
And fine.
And finally, that homeowners insurance situation in California demands real caution and early planning, particularly in wildfire risk areas like Mammoth.
That sums it up nicely. It's definitely a nuanced market, isn't it? Not just one story, but several different trends depending on property type and price.
Absolutely. You really need to understand those specifics if you're considering buying or selling there. It's not a one-size-fits-all situation at all.
Yeah, knowing these dynamics seems essential for making smart decisions in Mammoth right now.
Couldn't agree more.
Well, this has been incredibly helpful, really unpacking the current state of the Mammoth Lakes market. It really makes you think, though. With inventory, prices, interest rates all interacting like this, what are the longer-term implications? What other factors, maybe things we haven't even touched on, could influence where things go from here in the coming months or even years? Definitely gives you something to chew on. Thanks for joining us for this deep dive.